Hi, it's Anthony Meisner with Land Title. Came to bring you a Greater Denver Metro update today. Let's get right into what happened through the end of the year, and I think you'll find things have really kind of reeled back in on the inventory front, and we've had some really good stability, sales, under contract numbers, kind of to finish out the year. So that fourth quarter was pretty exciting to watch. Good news is now, if you're taking new listings, active inventory might be up 22%, but a lot came off the market, so you don't have this huge surplus right now. Now, you can see here over the last few years, this is a very seasonal, cyclical behavior. So do expect a lot of listings to come on the market in the springtime here, but buyer behavior has been doing significantly better than it has in a while. Now, the other takeaway from this first slide is that average sales price has been very flat if you're looking at it detached and attached combined. Now, if you're looking at them separately, you're going to see some really different, interesting information. So let's just kind of dive into some of the differences between the two. Active units and listings on the market, year over year increase of about 15%. In the detached market, now it's not the same everywhere. Douglas County has quite a bit more inventory than others. Broomfield seems to be pretty stable with where it was a year ago. So not all markets are created equal, obviously. But if you look at it in the attached front, we have 40% more inventory. So way more inventory than we have in the detached market, prospectively, right? And most of it's coming from Adams and Arapahoe and some into Denver, but Jefferson as well, 50% or so more. Now, if you look at Douglas or Broomfield County, quite a bit less there, but it really depends submarket to submarket. Now, the one thing I did want to talk to you about combined was just the new listing. So when a listing comes to market, I think one of the important things to look at here is when is the bulk of business happening, right? When is the bulk of new listings? When's seller behavior taking place? And if we look at this, March through October is like our peak seller season, right? And our buyers who have been really driving this whole real estate market lately do not operate in the same time as the listing. So, if buyers come out of the gate at a gallop in January, February, their peak season is actually well before peak listing season. So you can kind of see that the timing of the market doesn't always work out, which is how we end up with listings coming off the market. And then, interest rates bumped down just a little bit. Buyer activity really picked up in September. And that's as listings are dying down. So that's how we really ate away at a lot of our inventory levels. Now, month supply of inventory in the detached market, 1.68 months across the board. That's only 6% up above where it was this time last year. So we have a little bit more inventory, but really it's still a seller's market this time of year. That changes usually by about May to where we're much more in balance with where that would feel. So if you get multiple offers now, or you have, a few more showings because your showings per listing is higher, don't be surprised about that. If you're a buyer, it's a little more competitive getting into the market really early, but it's not necessarily a bad thing because prices tend to rise through the beginning of the year where they sort of stabilize out in the latter half of the year. Now, if you look at it from an attached perspective, these are already approaching those balanced levels, and we're just getting started for this year. So kind of watch this and keep your eye on attached listings. What I would say is if you need to sell something in the attached market, sooner is definitely better than later. And it's very clear with the volume of inventory. This is up 63% year over year. It's very substantial. Now, days in MLS, the national average is 71. So in the Denver metro area, 57 and a half is really not that bad. It is 25% more than this time last year, 27% more. But what you can really see here and kind of the takeaways is this is still transacting in less than 2 months to go under contract, right? We need to set proper expectations. But if you look historically back at it, these are 2017, 2018 numbers. They're really not that bad. Yes, we have more inventory, but we still have a low number of sellers and a low number of buyers transacting. So our pace of the market still is very, very good. Now, if we look at it by price point, this is where you can learn a lot in the market. Now, we had a really, really tough 2023 in the luxury market, but a lot of that luxury business is starting to come back. Those numbers are significant, 72% more in the 3+ million market year over year. The 2 to 3 million market was up 92%. And just as consumers have really come back, even the bulk of the market, 500,000 to even, 1 million or so, significantly more solds taking place in December than they were a year ago. If you look at it in the attached market, very different behavior here. from 4 to 600,000, we're down 20% in units. Some of the luxury stuff is down a little bit. 800 to a million in the attached market is down 44%. So big increases in detached, for pretty big drop offs in the attached market. These are the tale of two markets. And you saw this back in the Great Recession as well, in '08 through, call it 2010, 2011, where the attached market really suffered a lot worse than the detached market did. There's a lot of similarities taking place right now. So keep tabs on it. The one thing is, most of the inventory situation in detached is very similar. Below 2 million, it's all a very true buyer's market or seller's market at this point, right? Under 2 months of inventory, it's very competitive. You get into the luxury price ranges and we have more of a balanced market, a little bit more of maybe a buyer's market above 3 million. But this is the lowest point of inventory. So when you're looking at selling, or you're looking at working with people that are selling, sooner is probably better to put these on the market. If you get into the attached market, very different stories. We have way more inventory, 2-3 months of inventory in most price ranges. It's a little bit more of a difficult market, but it's almost feeling a little more balanced. You get into the luxury stuff, quite a bit more inventory in the market, and this is all going to just expand from here. Now, if we look at average sales price, this is like the $1 million question everyone is asking. We still really never hit those peaks we hit in 22, but we did see 3.6% increase year over year in our detached single family homes. Now, some places favored better than others, right? If you're in Denver or Broomfield counties, or even Elbert or Jefferson County, we saw some significant increases in average sales price, 7%, 9%, 12% in some ways. And if you look at it from some of the other counties out there, Adams, Arapahoe, or Douglas County, they had a much more contracting market than we had there. Now, if we look at the attached market did not favor as well. Now, Denver holds the bulk of the attached product, right? Because density is very important. But in Arapahoe County, in Denver County, and in Jefferson County, we did see significant decreases in home prices in the attached market over the last year. And I don't think this is necessarily over yet. 4% down or 6% down in some of these, you could be a loss of somewhere around $30,000 in value of a home. So this could turn around, but first, affordability has to really be there. And with some of the problems that face the attached market, it's just had a lot of stuff stacked against it. So kind of hang in there on that one. If you need something to share out, this is always a really good slide to share. The first part of the year was a little bit slower to start than 2023, but as we got into the bulk of the market, and then as buyers started to re-engage and as inventory was higher, you did see buyers step out, and they really started to outpace the market. Year over year in December, we were up 27%, but as the year ended as a whole, we were basically up 8% in total sold volume in the detached market. That's a really good sign, right? It shows the light at the end of the tunnel. Things are changing. Buyer behavior is changing. These are all really good signs. The attached market, on the other hand, because of everything that's been facing this market, we had the slowest market in a very long time. And we really saw a decrease in sales by almost 15%. So tough thing to take away in the attached market when the detached market is doing something so different. But it kind of is what it is. And so we have to share that information out. Now, the interesting thing to look at is the sold to list price, 98.6% across December for the detached single family homes. Pretty similar across most price ranges. This doesn't take into account concessions or price drops, so kind of keep that in mind. But things plugged along. In the attached market, it was actually very similar, 98.3% listed sale price, but with that much more inventory, you saw so many more concessions and things like that going on. So if you have any other questions, concerns, don't forget, we do a highlight reel if you need talking points for this stuff. I'm Anthony with Land Title. We can always provide you with other local market insights. Other than that, please don't forget to like and subscribe to the channel. We'll see you next time.